Well, there is a ton of news out there this morning. Certainly, Tesla is impacted by a ton of news this morning. We have yet another round of layoffs at Tesla today, including several longtime executives. Now, today, the news is that these are layoffs. We'll talk about that more in a minute of these executives, but I'm not clear to whether those are technically layoffs are just being called layoffs. We'll talk, but here's what Elon Musk has to say about that. He wants Tesla to be absolutely hardcore about headcount reduction, saying that executives whose subordinates don't obviously pass the excellent, necessary, and trustworthy test would find themselves relieved of duty as well, suggesting he wants those executives to fire even more employees or be fired themselves. That's from Electric this morning. Most interesting among the layoffs will be the four or 500 members of the supercharging team. I'd love to have more color on that one. If Tesla is going to it seems unlikely that Tesla is going to downplay the installation of superchargers, or maybe these employees were more at the strategic end and had really just gotten bloated. I'm also going to think that there are probably thousands of locations already located. We've already determined where the locations are. The planning has already been done. All kinds of details have already been done. And maybe it's just a matter of executing. And this was just a great time to kind of start over if Elon felt like things were not progressing in the way he wanted them to. Anyway, we'll see what that all boils down to. I'm sure there'll be even more speculation in the days ahead. I'll be reading in a minute that I get later today. I'll try to read what's coming in terms of more color. I'm also beginning to think maybe that those executive resignations were actually disguised layoffs, resignations. Like, hey, we just like you to, you've got all this money. Don't you need some time with your family? And let the folks resign rather than be laid off. Because now we have more of these executive resignation or layoffs, resignations, whatever they might be called. That doesn't mean that these people weren't good people. It just means that there's a change of direction and there is a real desire by Elon to get down and dirty and extremely lean and mean. All right. The early market is down $6 on Tesla, and that's probably at least in response. Last week with the announcement of the layoffs, there was a little bit of a take back from Tesla, but the market is down a lot this morning. And there's also, potentially some profit taking from the huge run up yesterday. Some of the problems in the market, you'll be hearing about them in a minute, why the market has gone down even more since I first started watching this morning. We do have Amazon earnings after the bell, so people are concerned, what's that going to look like? We have McDonald's missing estimates this morning, not a good sign. On the other hand, Coca-Cola beat. That, of course, would be a good sign. But we'll get into some of the reporting that's been happening this morning, which might be having a bigger impact than even these earnings reports that are coming out. We have from Sawyer Merritt this morning, a bunch of different quick news things from Sawyer. Number one, Volkswagen on Tuesday said that its operating profit dropped by 20% in the first quarter as weaker demand for its premium brands drove a drop in sales. Then we have this from Mercedes. Mercedes earnings plummeted 34% in the first quarter. And then we have this from China. We have Tesla's 14,800 new insured vehicles in China this last week. So let's see here. What do we got going on? What we've been hearing from AJ a lot lately, if you follow AJ, is, the other car companies aren't doing great. And it's not just BEVs, it's also other cars as well. And that would be some pretty good evidence of that from those two companies. And then with regard to Tesla, the first few weeks of the quarter were kind of slow with regard to China. Now, all of a sudden, we have kind of a normal week for sales in China. This would suggest maybe a bunch of exports over the last couple of weeks. No reporting from anybody in terms of production being cut in China. All right, so then we have from Elon Musk this morning. He's replying to Mitch Degg, Mitchdeg. I did partly pick it, 88, because it's a lucky number in China, but I also picked it because it's the birthday of his triplets, who are now 17. So take out of that what you will in terms of all the speculation that I mentioned yesterday about potentially the rollout of robotaxi taking place on 8/8 in China. That might be a little fast anyway, now that I come to think about it. All right, we have this breaking from Sawyer Merritt again. Tesla has secured a new $650 million contract to build the largest battery energy storage system in Australia, over twice the size of the storage system that has been there before. It will also mean that Neon Koli battery will be sized at a total of 560 megawatts. So that's a pretty exciting piece of news there in terms of some good sales coming in on the mega charger side. Now then, let's turn to the economic news, which is why the markets are swooning this morning and bond rates are, the 30-year is going up. I'm sure the rest are as well. Let's look at it. The cost of labor for U.S. companies accelerated in the first quarter at the fastest pace in a year and a half, complicating the Federal Reserve's effort to get inflation fully under control. The employment cost index rose 1.2% in the first quarter. The government said Tuesday that was the biggest increase since the 2022 third quarter and exceeded the 1% forecast of the economists polled by the Wall Street Journal. That is a huge jump, 1.2%. Compensation soared after the pandemic due to widespread labor shortages and helped to contribute to high inflation. Compensation costs have slowed from a multi-decade high of 5.1 in 2022, but they're still too high for the Fed's comfort. Wages and benefits rose at a 4.2% pace in the 12 months ended in March, which was unchanged from the fourth quarter. The Fed wants to see the annual increase in compensation slow to around 3%. The employment cost index is viewed as the most accurate gauge. I didn't know this before. This is the most accurate gauge of how much it costs company, government, and non-profit institutions to employ their workers. Labor is the single business expense for most companies. I did know that. Okay, and this is also from Market Watch this morning. CoreLogic's Case-Shiller 20 City House Price Index rose 0.6% in February compared to the previous month. Home prices in the 20 major U.S. metro markets were up 7.3% in the previous 12 months. This is up from 6.4% in the previous month's reporting. This is way up compared to what people were expecting. This is much higher. There just more nails in the coffin of the inflation being done deal, and that there's going to be interest rate cuts this year. I've already made my feelings known on this. There's not going to be any cuts in the Fed's numbers, in the Fed's the Fed rates later this year. Just not going to happen. And of course, that means the bonds are up this morning, as we'll report on in a second. Also, the Chicago Business Barometer is out this morning. This is known as the Chicago PMI. It inched down. It inched down to 44 compared to 44.1 in the prior month. 18th month in a row of being down. Economists polled by the Wall Street Journal forecast of 45.3. Let me go back and say this came in at 44. Forecasts were at 45.3. This has been contractionary, is that a word? Territory since August 2022. Economists said that the auto strike might have held the index down. The auto strike. That was when? New orders rose after a sharp fall in September, and production also slipped 4.6 points. Holy mackerel. So guess what? None of that is making the markets happy this morning. So let's start with Tesla. Oh, actually, Tesla's improving. It was down over 6. It is now down 530 at 188.75. We have got the Dow Jones down 100, well, call it 200. NASDAQ down 71. S&P down 17.79. And the Magnificent Seven, you've got Google and Amazon barely up, everything down, although not much, just a couple of bucks here and there. We've got the Cathie Woods, of course, because the bonds are up, except for PayPal. The rest of them are down this morning, but not horribly, interestingly enough. Okay, so that's where let's look at the percentages. We have got the Dow Jones down 0.5%, NASDAQ down 0.4%, and S&P down 0.34%, and Tesla down 2.56%. And Tesla, though, is gaining. It's now down only $4.73. So that kind of a rapid gain this early in the morning suggests to me that maybe we're going to end up in the green. Maybe people are going to figure out that these layoffs are strategic, intentional, annual, and are a good thing. And that Elon has already proven over at X.com that he knows exactly what he's doing when it comes to these kind of layoffs. I'm excited by it. I hope you are, but I am concerned, not concerned. I'm interested about the charging stations. What is going on with that? I'd like to know more about that. Okay, let's go in and take a look at the bonds. We have got the bonds this morning. Let's see here. Whoops. Okay, the bonds up 6 basis points on the 10-year, of course. No surprise. So 4.672, that might be a recent high. I'd have to double check that. We have got the 2-year up 4.8 basis points and the 2-month up only actually 0.9 of a basis point. So that is reducing that spread still at about the same as it's been, about 7.5. Okay, let's go ahead and take a look at oil. We have got oil now at down just a tad, down 30 cents, 82.23. Brent 88.13, up very close to yesterday's numbers. Natural gas continuing up almost a full percentage point this morning, passing the $2 mark, $2.05. And then we've got the gold slipping 43.20 down to 23.14. That might be a recent low. Silver also down 3% this morning. Copper down 1.91%. A little profit taking going on there, but maybe little nerves right now. This where the stagflation thing is becoming more of an obvious situation. The higher interest rates for longer, maybe people are worried that that's just going to add to downward pressure on the overall economy. I'm gonna up my number. I'm gonna up to 20%. No, let's make that back to a 30% chance of actual technical recession in the third quarter. So still 70% no, but 30% yes, because of the difficulty of getting past those government the government stimulus last year. All right, we've got the yen. Okay, never mind all that. The dollar is fairly flat this morning. We have got the Bitcoin down 1,546 to 61,215. And then we have got, that's it. Let me go back and check Tesla one last time, see if it's continuing to move towards positive territory. Nope, it got slammed back to the $6.29 that it was down pre-market. All right, so things hopping around right now. The Dow, yeah, okay. So I want to remind you that I did manage to pull off 2 Brian White interview videos. Please take a look at yesterday's. It was really, really good. Talking all about the details of what took place over the weekend with regard to over the weekend with regard to China. I think you'll like that one. And then that card will be right there, and another Brian White video coming up today. And then maybe there'll be a Good News Tuesday tonight. Might be a little harder today. We got a busy day planned in Toronto. So it's been great talking.